Greetings, Emini fans. Dwayne here, CFRN. Another Emini recap. S&P 500 Emini futures. This might potentially be the last video in this series because I think we've done enough of them to get the point across. We're not breaking any new ground, and goodness, if you've gotten nothing else out of this whole series, it should be that. We're not breaking any new ground. We're not doing anything new or anything different day after day after day. With this video series, with this trade setup, in this time frame, we're just going after the same thing again and again and again. Okay? I'm not saying I won't do another one. I'm just thinking about it. Okay. Today, May 7th, Monday, 2012. Okay. This is midnight Chicago time. And as much as it saddens me, at midnight, price opened at 1347. Ran all the way to 1366. And we did not get a single entry on this setup in this time frame. On the other hand, that would be this hand. We did issue a tweet last night. If you've installed our toolbar, which you can do by going to the homepage of cfrn.net, bottom right hand side it says install our toolbar. You would have received the tweet which said to buy 1357 stop, and that turned into a 13-point rally. So you still, all of this early going, I don't want to make excuses. This particular setup just didn't catch it. Now, is there a way, another time frame perhaps, or one of our other indicator sets maybe, that might have in fact put you into this trade? Yes. And I haven't been doing this much lately. Well, you know what? Let's not do that. If we're going to do something different, we'll do something different. If this is going to be the last one of the videos in this series, then it's only fair that we do exactly what we've done, so that it's the right thing. Alright, our system told us after all this, yeah, I know, after all that, the system finally goes, hey, why not go long? Oh, okay, if you insist, at 62.75. Now, you know by this point that we only risk 2 points on one of these trade setups, right? Okay. We had a 1-point drawdown from 62.75 to 61.75. You see that, right? And then price went up to 66.25. So let's do the math real quick. 66.25 minus 62.75. 3.5 points. Okay. The system once again tells us to go long at exactly 63.75. Price draws down to 62. That's a 1 3/4 point drawdown. We only allow for 8 ticks. This drew down 7. Nail biter. But is that reality? Does that happen? Yes, it does. Okay, Now the entry price is 63.75. The pivot high is 65.25. So again, we do the math. 65.25 minus 63.75. 1.5 points of maximum potential. That's a big word, maximum potential. I'll fully detail what it means later. Okay. The next entry we have is to go short right there. See the little line? Okay, the system says to go short at exactly 1362, and that results in us exactly getting stopped out. For how much? 2 points. We always risk only 2 points. Okay, moving on. Our next signal is to go long, and it's right here on this line. That price is 1363.50. From 63.50, price climbs to 68. 68 minus 63.50 equals 4.5 points. Maximum potential. Once again, the system says to go long at exactly 1366.25. Pivot high is 69.75. 69.75 minus 66.25, 3.5. Three and a half points of maximum potential. Okay, we're told to go long again right there. That price is 66.75. Price then goes up, puts in a pivot high at 70.25. 70.25 minus 66.75 equals 3.5. 3.5. Okay. Alright, the next trade, system tells us to go long at 1368. The ensuing swing high is 69.25. Okay. 1.25. As you know, I don't like to even... Okay, was that really the entry? Yeah. Did it really go 1.25 points? Yeah. Could you really have taken at least a point out of that? Yeah. Let's just say we got stopped out. Now when we tally the score, remember that I said what I did. Because the last thing I'm trying to do is to paint you an unrealistic picture. That's not why I do this. Okay, the next signal was to go short at 66.5. Price dropped to 64. 2.5 points maximum potential. Now this next one, really an odd one. It says it goes short right here at the line. Now, pivot low's way down here at 63, but the drawdown is way up here at 68. We know we only risk 2 points. But one could argue, what if this bar closed and price ran down here before it ran all the way back up here? Is that possible? Could that have happened? Let me say that again. Okay. We were told to get short here. Price pulled back to 67, which gave us a 1.25 point drawdown. And then this candle opened right here, this red candle. Is it possible that it ran down here before it ran up here to then come back and close here? Yeah. Could I drill down to a 1-minute chart and find out if that's what really happened? Yeah. Am I going to? Nah. Because, I mean, ultimately the thing did go from 65, 75 to 63. So, did it actually ultimately move 2.75 points? Yes. But is there a very high likelihood that the trade got stopped out? Yes. So rather than go chase it down and see, let's just make it easy on ourselves and just consider that we got stopped out. Alright? And that highlights every trade from today. Not a lot of big swings. It is only 9:46 p.m. Chicago time, or I'm sorry, Pacific time so far. So we're not up against the midnight marker yet, but this is what we have for the day, and this is what we'll work with. First thing we'll do, as we always do, we'll count how many times we got stopped out. 1, 2, 3, 4. That's how many times we got stopped out. Stopped out 3 times. Times 2 points per stop. Plus, as you know, I always add 1 tick of slip for each stop. Not because you always get slipped on a stop. In fact, you should rarely get slipped on a stop when you're getting stopped out, because the market's so liquid. But, you know, out of some odd sense of fairness, just seems like a good thing to do. So 1 tick times 3.75, right? So that's going to be 3 times 2 plus 0.75 equals minus 6.75. Okay. Alright. Stopped out 3 times 2 points per stop. Plus we added in 1/4 point of slippage, or 1 tick, for each one of the times we got stopped out. That gives us a negative 6.75 on the day. Alright, let's go through and add up the max potential. 3.5 plus 1.5 plus 4.5 plus 3.5 plus 3.5 plus 2.5. That gives us a grand total of 19 points positive maximum potential. $19 points maximum potential. Okay, I saved the big disclaimer to the end instead of doing it every time tonight. Now, you may have watched a video or two or been to a website or two where this would just be called a 3.5 point trade, and this would just be called a 1.5 point trade, and this would just be called a 4.5 point trade, because there was this entry signal and that's where it ran to. Okay, I don't do that. I don't feel good about that, because in order for me to count, now I'm definitely counting every stop, no two ways about it, but to count every tick of positive movement, number one, you had to be there. Number two, you had to be willing to pull the trigger. And number three, you had to have the savvy to milk every single tick out of that trade. Are you that diligent? Are you that tireless? Are you that good? I don't think you are. I don't. I think on a good day, maybe you're half that good. So 19.675 equals 12.25. I hope I didn't hurt your feelings. So if you're only half that good, we're going to divide by 2. In other words, we're going to throw 50% out the window. 6.125. It's just kind of an odd number. You can't make 6.125 points in the E-mini market. So let's just call it 6. How about that? Okay, 19 points maximum potential. Stopped out 3 times, times 2 points per stop, plus a tick of slip for each stop. Now, I believe you are that good. I believe I'm that good. I am absolutely, beyond the shadow of a doubt, the guy who could walk in and sit down and definitely get all 3 of the stops, even though they were spread out pretty good. There's one. There's the other one. There's the other one. I'm the guy that could have caught them all, okay? $19 points maximum potential. I'm not that guy. So we're going to take the 19. We're going to take off what we got stopped out by, 6.75. That leaves us with 12.25. We're going to divide that by 2, and it gives us like a weird number, 6.125, which is not a real number. In E-mini futures trading, it's either got to be a quarter, a half, 3/4, or a whole. So we're just going to call it 6. 6 what? We're going to call it 6 points of realistic net potential. Does that mean in order to get 6 points, you had to take every one of these trades? No, doesn't mean that at all. Far from it. You could have taken 2 points here, point here, that's 3. You could have taken 2 points over here, that'd be 5. You could have taken another point over here, that'd be 6. Could have taken 1 point here, that'd be 7. Oh, and if you got stopped out there, that brought you back down to 5. You follow what I'm saying? Now, Is 6 points per day even a realistic goal in E-mini futures trading as a day trader? Well, some days the market doesn't even have a 6-point range. Most days it does, of late. But there have been days when it, and there are days when it doesn't. So what I want you to think about is, what are your expectations every day when you approach the market? When you sit down and grab your mouse, and you've had your quiet time, your prayer time, your coffee, your bagel, whatever your routine is, and you're ready to go to work, what's your reasonable expectation? For some people, it's 2 points. 2 points and I'm done. Other people don't trade that way. I would like to suggest, if I may, that you give serious thought to 2 points a day and being done for the day. Now, does that mean you have to get all 2 points in one trade? Well, if you can, it's better. The fewer times you have to expose yourself to the market, I think the better you are. I mean, this first trade here, that gave you 2. But, you know, if you took 1 here and 1 over here, okay, it's only 9:30 and you're done and you've got your 2 points. Now, we've talked about this. 2 points, 1 contract's $100. Not a lot of money, I understand. Well, it is a lot of money. Let me not say that. There are places in the world where $100 a day is a fortune. Where our orphanage is in Africa. If a man with a family can earn $1 a day, not only can he hold his head up, he can feed his family. That's why he can hold his head up on $1 a day. So let me not just discount 100 as being nothing. But let me say that as you begin to add contracts, whether it be 10 contracts and it becomes $1,000 for those 2 points, or 100 contracts and you do your own math, that's between you and your account, okay, and your ability. As you know, we have a trader who comes on the show from time to time, Michael. He trades as many as 10,000 E-mini contracts in one day. He trades as much or more in one day than many institutional funds or hedge funds. This isn't me trying to encourage you to build your account so that you can trade, 1,000 or 10,000 E-mini contracts, or even 100. You have to determine what's comfortable for you. But I'll tell you what, beyond any shadow of a doubt, it is easier to increase the number of contracts you trade than it is to increase the number of points you take out of the market. I'm going to say that again. It is easier to increase the number of contracts you trade than it is to increase the number of points you net out of the market on any given day. So on this day, if we actually hung in there and took every trade, but we only got 50% despite our best efforts, which is realistic, okay, that's 6 points times $50 a point, $300. Times 10 times whatever, that's how much it is. Okay, so I don't know how many videos I've done in this series now. It feels like there's about 30 of them, but I'm probably overestimating. Maybe there's only 20. But I've used the same setup day in and day out. You haven't heard me say things like, well, today we had a trending market, so I had to switch over to this. Or today we had a flat market, so I had to go into this mode. Or we gapped higher this morning, so I had to do this. Or the market sold off at the open, so we had to reverse our strategy. Have you once heard me? Go back and listen. You know, well, you don't have to, because if you've been following along, you know I haven't said that. In fact, I've made it a point not to do that, because I want you now, if this is the last video I make in this series, I want you to sit there and scratch your head and go, how's that possible? How is it? Because you know that over the course of this video series, there's been every kind of market. There's been runaway up markets, runaway down markets, dead flat markets. There's been Fed days. There have been other types of economic reports. Spain went bankrupt, or whatever it is that happened to them. Okay, so anyway, whether I do another video of this particular, and as part of this series or not, these videos will remain archived for you. You'll be able to see them, watch them, and if you come to our live E-mini futures trading room, you can take a free trial. CFRN. Don't let all that HTTP : stuff confuse you. In your browser window, just type in CF. Oh, I should probably spell it right, huh? In fact, there you go. That's really all you need. All that HTTP and www stuff, that's old school. CFRN.net/apply. If you go there, all we need is your name, your email address, and you can take a 1-week free trial. That's 5 days in our live E-mini trading room. You get the indicators, you get the data, you get the charts, you get the platform, you get our attention, you get all your questions answered. We literally give you everything that we give a CFRN partner. The only thing you don't get is you don't get to come into the partners meeting on Thursday night, but above and beyond that, you really do get it all, and there's no credit card required. Now, why would we do that? Are we that desperate to have somebody come take our free trial that we give you 5 full days, let you use every one of our tools, turn over our stones, kick our tires, blah blah blah? Are we that desperate? No, we're not. What we are is we're that convinced that once you see the power of what we have, you're going to go, there's no way I'm not going to trade with that. See, no parlor tricks, no smoke and mirrors. We put it in your hands, we show you how to use it, and then at the end of the week, you're just sitting there smiling, and we say, okay, did you want to become a partner? And you just have that grin. And then we send you the link, and you click it, and there's a financial transaction. Yeah, it costs money. It does. I'm not going to pull your leg. We have electric bills to pay, and I had the air conditioner fixed in my daddy van today, $200. I'm not complaining. I am just so thankful that when I get in that thing tomorrow in the Phoenix sun and it's 100 degrees, that I got air conditioning. I can drive around with my windows up. I'm pretty excited. So anyway, yeah, that's the deal. CFRN.net/apply. Come hang out. Take the free trial, ask questions, and it's not just me and Michael that will be taking good care of you, but Bert and Leslie, our brokers at Daniels Trading. They'll not try to hard sell you and force you to open an account with them. They will be very kind and very gracious to you. They'll make sure your data is working properly, your charts are working properly, your indicators are working even if you never open an account with them. They'll still set you up with the demo and the simulator, everything. They'll cater to your every need, so that worst case scenario, when you go back to wherever it is that you trade, the worst thing that's going to happen is you're going to sit around and go, man, I sure wish I had a broker like Dwayne and Mike have. That Bert and Leslie, they're awesome. See, that's the worst that can happen. Okay, so don't be shy. Come and apply. I hope to see you in the live E-mini trading room.